future trends, deep insights, industry leaders. This is the iGaming Next podcast with your host, Pierre Lindh.
This podcast is brought to you by Pragmatic Solutions, the leading iGaming PAM platform with a modular approach, including many benefits like a fast, secure, and scalable API-based platform, integrated with all major third-party products and services. Make sure you head over to Pragmatic Solutions and join our smart thinking.
And surprise, surprise, we are back with the powerful Team Heath. How is it going, Tim?
G'day, Pierre. Don't know how powerful, just like to get the head down working hard.
Yeah, that's it, man. There's no shortcuts, I don't think, especially in these times, I suppose, with the financial climate being what it is.
It's been an interesting couple of weeks, both in the stock markets and the crypto exchanges, the crypto world as well, with Luna and UTT doing funny roller coasters and then bottoming out. But no, I just wanted to say I was very disappointed I didn't make it across to New York for the iGaming Next conference there with JP Morgan. And sounds like it was an absolutely wonderful event, and I'm certainly looking forward to going to it next year. Just not when the Power 50 is on in Marbella. And I know some people actually, I think it was David Upton, from Upton Capital, he flew across the next day. And I know Robin obviously flew across, so I could have pushed, but maybe getting a little bit lazier in my later years. So apologies for that. But I heard from the guys from Yolo who did go along, it was an awesome event. So well done on that one.
Yeah, thanks a lot for that, Tim. And then the prioritations for next year. That's the only thing I can say. But yes, no, it was a great event, and the next year should be even better for sure.
So what, there's an iGaming Next Power 50 happening, is there now? Is that what you're saying?
No comments. I think. I am the host today here, Tim. I'm the one asking the question.
Okay, no problem.
All right. So for one thing to the other, I mean, Tim, it's always great to have you on here, of course, and I respect you a lot as one of the industry leaders here in the industry, and for me, what's really interesting at the moment is zooming in a little bit on kind of the macroeconomic climate that we are navigating at the moment. And obviously, you are one of the leading investors in the iGaming, fintech, and blockchain space through Yolo investment, which is, I think you have something like 600 million euro
assets under management at the moment. So yeah, it's going well.
Yeah. Right. Yeah, interesting. And obviously the fund just keeps growing and growing, and we are happy to be a small part of that, of course. But today, what I wanted to talk to you about, Tim, is and understand better is just kind of like investing smart during these uncertain times, And as a bit of a background, of course, the last something like 6 to 9 months, especially in the iGaming industry, technology industries, the market capitalizations have been coming down steadily, slowly but surely. Inflation, obviously rampant. Interest rates are increasing. There doesn't seem to be a lot of upside at the moment, looking at the macroclimate. So, I wanted to kind of hear this from your perspective a little bit. Obviously navigating through this climate through YOLO investment. Like, how has this financial climate affected YOLO investment so far?
So YOLO investments, it's interesting. We're not a penny stock trader. We're not looking to enter a position and exit a position a day or a minute later. We typically looking at a 5-year horizon when we're making an investment. And, I think if you look at what builds great businesses, it's about just having a long-term plan and doing the right thing and looking after the customer and building great product and having that product market fit and knowing what your customers want. If you start getting worried about what the market thinks about you the whole time, you can lose focus on what's important. And people always say to me, what do you do when the Bitcoin price drops down? I'm like, how do I handle it? I close the app. I don't look at it. And that's a very hard thing for people to do. But having been through a number of bull and bear cycles in crypto over the last 8 years now, guess what? The markets will recover. Crypto will recover. It's about having that persistence to, one, and come back to poker as we first in that first podcast, don't invest more than you can afford to lose. And if you start taking margin loans to invest on something, I can't control the crypto market. You can't control the stock market. All we can do is control the controllables, and we're not smarter than the market. That's just the bottom line. So don't invest more than you can afford to lose, like gambling in essence. And then if it is going down, we'll sit on that position. And if you're investing in strong fundamentals of a company over a 5-year period, you should have a decent return. Now, in startup world, obviously we're getting at a lot earlier stage and we're trying to build businesses up quite well. But the upside will be there if we followed all those principles on how to build a business. Right. But if you're investing into a Canby, an Evolution, a Playtech, GAN, all these gaming stocks, we don't really control what the market thinks, and we can't really say, well, hang on. I mean, the great example, I was at Henry, he's the head of a sports book at Coolbet, and it's his birthday. We're playing cards last night and just having a chat about it. And he goes, we're doing a fantastic job as Coolbet. We're pumping out, we're one of the market leaders in Chile. We're doing all this great stuff in Canada. The European markets are good, but the market doesn't like us, and it's almost unfair. And I'm like, it is unfair because the markets are looking nearly for quick wins, and I don't know, FanDuel, I think it's a great business and it's got a great potential, as you likewise think, but I think it's been completely overvalued over the last 2 years. And that's nearly caused from FOMO, in essence, of people think, well, hang on, there's easy money to be made. And if everyone jumps in that bandwagon, great, it goes up. We don't really know why it's going up. We don't really know why they had a ridiculous valuation. And look, no offense, good luck to them if they can do it. If the market's, they're the darling of the market, then fantastic. But the fundamentals of the business is really what drives a long-term value proposition. Unless you want to be a day trader or a crypto trader on a daily basis. But if you're going to be, then treat it like sports betting, where if you can hit a 53% win ratio in sports betting, that's a bloody good result. But you don't always hit a 100% win ratio in sports betting either. So you've got to really take investing a little bit like that, and also then diversify your portfolio, which is really, really important as well. But going back to your first question, I'm sorry, I'm nearly sort of mumbling in my head here a little bit. But
yeah, that's right.
Why has the market gone down and turned so sharply in the last couple of weeks? Well, I think it's been looking to do this for the last 2 years. There's been certain world events that have removed confidence in certain markets. And then, when one goes down, guess what? 2, 3, and 4 follow. Because, again, it's that fear of missing out of, is the market going to tumble? How do we get out? And then if the mob then sells all their shares, nothing's really controlled there. So it's been wanting to happen. The economy's been overheated. Yes, there's the inflationary pressure going around as well. The biggest one I've found, if we just look sort of back to those principles of the business, I've seen a crazy amount of demand for programmers at the moment. Now, what's more, I've now seen a crazy amount of demand requirements for salary for programmers, which are unbelievable and nearly extraordinary, not based on the talent and the value add those programmers can give, rather what the market is stupidly prepared to pay for them because of the lack of supply. Now, if that's just one part of what's inside a business, does that then trickle down across the whole organisation that everyone else thinks, well, hang on, there's 10% inflation and, well, I can get a better salary doing here. Doesn't everybody then feels like they should all be getting that? But there's no value coming on the top. If everyone wants a 20% salary increase, are we actually delivering 6x at 20% in the first place of the business, which is what you should be aiming for in the first instance? So I think there's a lot of market corrections happening, and you put them all together, and then you see a nice little crash.
Yeah, exactly. But you mentioned like as long as the fundamentals are there in an organization, as long as the fundamental principles and the foundation is there. But still, like you can't ignore, because obviously you invest. You do a lot of seed and Series A investment, and I would assume for most of these organizations, this is the first or the second round of several rounds of investment that needed in order to get these companies where they need to be. And isn't there also an element of, as we now go through this climate, that it's becoming difficult, more and more difficult for these organizations to go through these later rounds where they need bigger and bigger funding, so to say?
Mm-hmm. So we've been investing quite heavily in Nigeria and Kenya in fintech startups down there, especially using crypto to move the money around, and also that, let's call it the super app of web money movement, which is following on from a WeChat or a Rappi or a Grab in Indonesia. Now, there's a couple of really good ones in the Pan-African continent. Sorry. It almost felt like after there was a few of them happening, like Clipper Cash happened, it was ridiculous valuation. And then everyone's like, what's the next big opportunity? I don't want to miss out on that opportunity. And if one VC jumps in there and there's a bit of sort of like deal flow being passed around for co-investment, you almost say, oh, well, Sequoia have validated it, A16Z have validated it, Headline have validated it, Yolo Investments have validated it. It must be good. But who's to say that initial VC hasn't sort of followed someone else going in there that, you know, a rising tide raises all boats. So I think now I've seen those ridiculous valuations which have been happening, and nearly a fear of missing out from a VC perspective. Now people are going, hang on, we don't have an endless supply of cash going around. Maybe in a turmoil market, we need to be a little bit more careful, a little bit more diligent about where that money's going to and what that check size will be. And even I've seen the last month, one guy said, well, hang on, you were going to follow on our next round. And I just said, not at that valuation. A month ago maybe, but not at that valuation now. And all of a sudden it's nearly, but we thought that would be okay. And there's nearly a misalignment. Again, what drives the fundamentals of driving a valuation in the first instance? And investing money into a company, you've got to find the right match. Now, it's not a competition who can bluff the other one even harder, but it's about being realistic and going, what do I need the money for, and how is that VC going to strategically help me grow my business if I'm putting myself in the shoes? And I'm not out there to try and bluff the VC for going for a higher valuation. If there's an endless supply of money coming in, actually, who will help me grow my business to take the principles of business and use them to move it forward, which will then give me a better valuation in the long term? And quite often, people took too much money in, and they almost had this desire, we must spend it to justify the amount of investment we got in, to justify the next round we're going to do. The biggest thing I hate is when we're on a pitch meeting and someone says, oh, we're going to do a 1 million raise now at X million valuation, but as soon as we've done that, we're going to start our Series A month later. Oh, why the hell would you say that? Why is the 1 million going into a business in the first place if it's just to then get you to your Series A and Series B? What about focusing on how to get that first dollar made, how to make that first dollar profit, how to make that first dollar revenue? Don't say to them, put your money in, but don't worry, we're going to invest more money. We're going to raise more money in 3 months' time. It's ridiculous. So I think the market becomes overheated and everyone gets caught up in this momentum and think it's really easy and we can put any valuation on because we know there's an endless supply of VCs who don't want to miss out. Bottom line.
Exactly. And I suppose, especially in more like speculative investment classes, like on the crypto side, for example, I had a conversation with someone who is building like a casino metaverse, and she was like speculating what should the valuation be of this startup, and she was saying that maybe I put it at 10 million, but I heard someone else recommend me that it should be like 60 million, and it's like wild speculation of like you don't really know like where to find where the valuation should be and this like highly speculative project. But what you're saying is like now through this climate is kind of like the changing of the guard, where it's the investors that have the kind of the power a little bit again to negotiate and to find a way. Or
yes, but I mean I was on a pitch deck or a meeting with said person doing a casino metaverse, and I really like the product. There's no doubt about it, and I like the principal person behind that product. but the valuation was ridiculous and there was no substance behind that valuation. Now, if it had been a sensible valuation and understanding what network and ecosystem we can bring to the table, and we could find what that happy medium is, that was a realistic one, then let's get in there and let's get the ball rolling and actually making this into a big business and a real business. But floating between, it could be worth 10, it could be worth 60, it's a big difference, and it worries an investor that perhaps the focus might be in the wrong place. Yeah. And look, to be fair, there's a number of assets we've missed out on investing because of our investment thesis, which not everyone agrees to, which have gone on to be absolute superstars and smashed it out of the park. And I wish everybody the best of luck with what they're doing. And it's not just because if I don't invest, it doesn't mean it's a shit business. It just means it's not for us and our thesis.
Yeah, exactly. And on that note, Gary Vee always reminds people that you think you make bad investment decisions or you think you missed out on something. Then he reminds people that I missed out on Uber. He always says, and he didn't think the business plan was right and all of the things. It's easier to predict the past than what it is to predict the future. I think as well.
Interesting one on that. I remember talking to Verif, the Estonian KYC startup, in about 2017, and they had 7 staff. And I sat down on beanbags in their conference room because that's all they had, and talking through what they're doing and whatnot. And I wasn't very well known in the Estonian startup world then, so we had fluttered with the idea of investment, but we weren't really a VC then. We weren't really doing it. So we shook hands. We signed a deal to use their services, but I said, I'd love to invest in this, but the conversation never went further. They just did another $100 million at a $1 billion valuation. And I'm really, really happy for them, but I'm also shit. I missed out on that absolute cracker. I could have put in, $100,000 and got 10% of that. That would have been an amazing, unicorn journey there. But you can't cry over spilt milk, and control the controllables. It's you win some, you lose some. Bring it back to poker.
Exactly. Is it like when you sit down with these companies, Tim? Is there an element of FOMO sometimes that you think what if I miss out and they become the unicorn or whatever?
Yes, there is.
We're all humans. I mean,
but this is where the sort of, from an investor perspective, is actually coming back to what our core principles and thesis are on what we've got 80 investments we've made now, and we like to benchmark them all, how they're going, whether it be fintech or gaming or B2B supply or whatever. Who is trending in the right direction that shows us to know what they're doing and how they're going to grow. And we need to nearly have our framework or our Bible. And this is what our thesis is. And we know it will work 60% of the time.
Yeah, that's how it is.
70% of the time. And that's a good strike rate. And if we hit a home run, icing on the cake. But you can't sit there. I've always said in the poker, the ifs don't pay the rent when you're playing cards. And it's the same in venture capital as well. And if you sit there worrying about the missed opportunities, well, then you're not focusing on the right things in the first place. It's a hard one, because then you think, why don't we just put a couple of hundred in that one just in case?
Yeah, exactly. We've been hardened through 20 years of bad beats on the poker table to know that don't cry over spilled milk, essentially.
Yeah.
So Tim, I mean, you mentioned your investment thesis here, like the core principles that you guide yourself through when considering an investment. First of all, can you talk a little bit what those are? And then secondly, again, now that the economic climate is changing, is your investment thesis also changing in this climate?
So I'll answer the second question first. We did our end of year review middle of December last year, and I sort of sat down with the guys and said, instead of trying to invest 500 in 10 investments, let's start looking at 5 million into one investment and really put hard work into helping them grow and build their business, because we're 14 people in Yolo Investments now, 15 people, something like that. I don't want to grow that. I don't want it to become a factory, if that makes sense. I don't want it to become this sort of machine which churns out analysis and there's a lack of a human touch. I still strongly believe the gut instinct about concept, opportunity, scale, founders, application, hard work comes down to what works. And, the big one is, can that business scale to be into a place where we think it should be? we're not lifestyle investors. I've got a friend in America, and he wrote software for psychological testing at universities. And he's got this software into 300 universities around the world and does extremely well. Great lifestyle business, and he'll exit at some stage. He actually probably come and jump in with me in Yolo Investments. He's a very, very smart guy. But for him, it's a lifestyle business, and let's say his net profit is $500,000 a year or $1 million a year, whatever. That for him satisfies everything he needs, but it's never going to grow to be a 20 million EBITDA a year or a 50 million EBITDA a year. He doesn't want it to be. So we need to also look, when we have to return results, we've got to pick the right investments which have that opportunity to really J-curve up and to scale. Not just invest in lifestyle businesses which bring a good constant return, which are very solid and healthy businesses, don't get me wrong, but it's not what our role in this investment framework is. So the thesis is, we want to do bigger rather than smaller. We want to give more attention. I want to expel more of my knowledge. And I always say, I always ask the target companies, how can we help you? What do you want us to do on this journey? We talk about that. And my response then is, our role is to help you avoid the mistakes we made growing up, building businesses, just to avoid the mistakes we made. And that's priceless, I would hope, because I've made a lot of mistakes along the journey, and avoiding those mistakes can actually help you grow your business 10 times faster, in essence. And look, the great example, we just talked about the New York conference you did, and it's like, it would be great for the ego, for the notoriety, to have a conference 5 times bigger in New York and be on the front page of the New York Times. But does that really help? Is that really the best thing for this exclusive, very knowledgeable expert desire to be a part of environment, which commercially will attract more sponsors of a high pedigree paying more money because of the right people are there? So sort of understanding how you're going to grow that business is really, really important. And then having that founder who can, dictate what and why and how, and then also take on information, debate it correctly, and then say, right, this is a good idea. The great one I say with slot companies, we need every gaming license there is. Yeah. But they don't realise that, Malta, the MJ B2B supply license, you're looking at 18 months until the first dollar's struck. And you're looking at, let's call it $50,000. But we also need Spain, Italy, UK and Romania and Estonia and Sweden and whatnot. But there's a cash flow element there. You still need to make the money to grow the cash flow. You just can't go out to the investor and say, we want 5 more licenses. Can I get another $1 million, please? Because it's not always going to work that way, because investors want to see a return on investment. So walking through that conversation and bringing in parallels is really, really quite important. And understanding the growth journey of a product is really important as well. Not losing focus too. Some of our banking assets, we can do everything. We can be the next Revolut. You could be, but you're going to struggle to execute. So focus on what your unfair advantage is, what that people always call it a USP, but I like to call it, what's your unfair advantage, and drive that home and be the best in business on that unfair advantage. And that's the most important thing moving forward, because that, if you get that unfair advantage right, people will subscribe to your business, people will pay for your services, and that is what can scale and really start creating amazing value, valuations, and fun.
Yeah. Exactly.
Having a successful is fun. At the end of the day, hard, but fun.
It's very hard, but and hopefully some fun in between the hard work, I suppose. But what you're saying is kind of like most founders, myself included. Let's say when we go through this journey, every day is uncharted territory, because you're building a business. In my case, for the first time that starts scaling. And so, it's like a guessing game to some extent, because you're meeting new challenges. And obviously, you and your colleagues at Yolo Investment have gone through this process a lot of times under a lot of different situations. So you can essentially help your investments to guide through what the correct roadmap should be or what the focus it should be, because it's not easy as a founder. You get very much locked into a bubble, and you get tunnel vision sometimes, and it's that perspective perhaps that you can bring, and the experience to help the investment take the right decisions.
I think it's really important that as an investor, we don't stop the founders dreaming. We want you to dream big. We want the founders to believe they can do anything, and to have, to go to bed and wake up in the middle of the night and write something down and go, wow, that could be a super cool idea. I still do that myself. I still get energy from doing that. And we need to mold that. We need to craft that. We need to finesse that forward and never lose that, because that's what we're investing in. Your vision. We're investing in their vision. All we're trying to do is say, hang on, just a little bit to the left, off we go, just a little bit to the right, off we go. And if a founder is sort of saying, well, every time I've got a good idea, the board is telling me to shut up and don't do it because I need to focus on X, Y, and Z, you then nearly become a victim of your own investors, and you start thinking, well, why the hell am I doing this in the first place? That this is my baby and this is what my dream for it is. That's nearly unfair, but you potentially could have lost control of that because of whatever else, and you may have raised too much money and there's too much control going in there. So that's one thing we're really, really careful of. I think because we've done that ourselves as well, we understand what to dream means. And I don't. Once in a while, with a few assets we've had to come in with a heavy hand and say, no, you didn't listen. You've made those mistakes. You've done this. You've done that. It's not just Uncle Tim handing out more money for the it's not shits and giggles, This is a serious business and this is serious responsibility, and you need to pay the electricity every month. You need to pay the employees every month, and you need to focus on the full rounded business to make it work. It's not just about that idea, but equally there needs to be that forward thinking going on, that vision, that dreaming going forth on how you will change the world. Or change change the industry, or disrupt the industry, or change the climate, change the perception, change user behavior and habits.
Yeah. No, it's a good point that you mentioned, kind of not dragging out this like dream vision from the entrepreneurs. And I spoke about this with Bendy Cherniak. We talked about like what makes a good entrepreneur, and I said I think the best asset for an entrepreneur is to be delusional, because the amount of work and dedication and sacrifice that it takes to pursue this vision doesn't really make any sense. If you really think about it, because it is if you look at what you have ahead of yourself to succeed, and the uncertainty, and most likely the company, most companies fail at the end of the day, and your dream fails and so on, and so you have to be a bit delusional in order to be a good entrepreneur, is my thesis at least. And so to keep that dream going is really important for that reason, because I think a lot of entrepreneurs are not necessarily putting in all that energy for especially not the short-term financial benefit, because you have to be prepared to take a low salary and stuff like that. But just for the dream, like for the vision, can you make the vision into reality at the end of the day? And I think it's a good point you mentioned.
Yeah, and it's also like you've got to enjoy it. I remember this is the travel writer Paul Theroux, and he said, tourists know where they're going. No, the tourists enjoy the destination, but travelers enjoy getting there. And it's a really important thing. You've got to really love this journey, the highs, the lows, the ups and downs, left, the rights. You've got to enjoy the hustle. You've got to enjoy you're on your back. What do you do? How do you get up and fight another day? Or it's going well. How do you stay humble? How do you stay discreet? How do you not become an idiot? You've got that. What do they say when you're humble in victory and gracious in defeat, or something like that? And I think that's really, really important, not to put yourself forward to where you are. But you've also got to enjoy the small victories along the way as well, and you've got to celebrate that team success. And I suppose there's some of the traits that we look for in founders that are prepared to put the time and the dedication and the hard work in to getting to evolving this vision, to evolving this dream. And again, we're there as a support. So when something gets knocked backwards, we're there to catch them and say, up we go again. We've all been through it. This is how we need to deal with it. This is what we suggest. And that's a really important. It's bloody difficult being a founder. Is the bottom line, and it's hard work. And not everyone will. You may have the best idea in the world, and you can't control everything. And market forces will hurt you. Then you've got to keep getting up and going again, and be smart and think outside the box. And how do you hustle, and how do you get something happening for the cheapest amount of money, and when do you need to spend money in the right places because it's going to be a long-term benefit to the company. Yeah, but you've got to enjoy the journey, and it's not hard. It's not easy on everyone to do it, and not many people are built to do this. Most people are built to go to work, do their job, be paid well, get a good bonus, and go home and walk the dog.
Those are the smart people. I would add as well, to be honest with you. Like I said, I go back to the delusional, but the journey is the reward. It's like what Steve Jobs used to say. Steve Jobs used to say. And Tim, I mean, on that note, by all accounts, from an outside perspective, you have had an incredible career. You build your empire from scratch, and you've obviously become very successful at what you do. But have you ever felt that you have arrived, or is that ever the goal for you? Because you work very hard. I mean, still, you don't have to do that. Like, why do you keep going?
I know. I really don't know. I'm delusional.
There we go. I was waiting for that.
I get a lot of enjoyment out of solving problems. It drives me. Now, if I'm out I'm playing in the Estonian cricket here, and I play every Saturday, and I love running out in the field, and I'm not going to stand there with my hands in my pocket daydreaming. I'm looking at the ground, looking at the field like a chessboard. How do we get in here? How do we win that game? My mind can't stop doing that, and I think, one thing I'm learning very quickly is finding that right balance in life. And I think it's really important not to go all in on one thing, because I've talked about the balance in your portfolio of assets. When you're investing, you need to have a sensible balance and diversification of portfolio. I think in your mind and your time resource allocation, you also need to have that as well, and not just do crazy 13, 14-hour days, because you can. The mind's wanting, you can keep doing it, but actually stopping and tuning out for a little bit is certainly very important, and probably something I'm learning a little bit later on in life, but I'm enjoying trying to do that a little bit more as well. In terms of what we're trying to achieve, this picture just keeps growing in my mind. Well, hang on, what about that section there? How do we go and attack that? How do we make that better? How do we do that? And we're in a very fortunate position that we can build, invest, or buy to solve a problem. The only problem with buying is then you need to support it and resource it internally, which has got its own scaling problems from a human resource perspective as well. So I suppose that's where more of the investing side comes out. It's more being helpful in crafting a vision or supporting a vision, as opposed to actually executing that vision, which I don't really want to be a part of that operational side of the equation anymore. And I think I'm more valuable in that regard on helping craft that vision and supporting that vision moving forward and avoiding mistakes. Simple as that.
Yeah, exactly. Do you ever feel that you will get to a point where you feel that you have arrived? Or is it a never-ending journey?
I'll be 10 foot under pushing up daisies.
Fair enough. I like it.
I enjoy the journey, and I think I enjoy the journey, and I don't know what I'd do with myself, and perhaps more travel, reading, or cricket. Who knows? But I think there's finding the right balance in there. I think it's an inquisitive mind at the end of the day, and a can-do attitude. And coming back to the investment point, I'm looking for that type of inquisitive mind in a founder that we can get behind and amplify. Probably is the best word there, and not looking for someone just to put their hand out and do a job, and if it gets too hard to slink off and go and do something else, to follow something through and really inquisitively solve problems.
Yeah, exactly. I think this is very much related, like the type of lifestyle that you have, and this kind of like constant improvement and constantly going after new ideas and new challenges and so on. I think it's very much connected to just not wanting to be complacent.
Yeah.
I think at least this is what I feel, at least, like the complacency is like my biggest fear in life, just to wake up in the morning and like just being content, and kind of live out life without really much of a plan. Like the days look the same, and there's not much to look forward to. It's kind of like a copy paste every week kind of thing. I think it's like a fear of that life, I think.
But it's also, I mean, I know you're an avid runner and fitness freak. Well, not about freak,
Yeah.
but you're a fitness dude, if I can call that. And if you go and do a lot of exercise before going to bed, you actually sleep a lot better being exhausted from physical exercise.
Yes.
Whereas if you do nothing and then go to bed, you actually don't sleep as well. Your body actually enjoys emptying energy, refreshing and emptying energy again. And I think that's got something to do with it in there as well. If you just on that sort of like that, you actually your mind goes a bit stale and your body goes stale, obviously, as well. And
Yes.
so I enjoy playing my paddle and my squash and my cricket and whatnot, and exhausting myself physically, because I just find you get a good night's sleep and you're up and right, let's go. Let's get active.
Yeah, exactly. It's very connected, and it's like David Goggins. He's a famous like ex-Navy SEAL kind of crazy fitness guy. He has like the world champion record in pull-ups in a day.
Okay,
He's like in 24 hours he did 4,000 pull-ups. Like a crazy guy,
Wow.
But he says there is no end, my friend. There is no finish line, and it is the same in just your general life as it is in training. Like there is no end to this, every day we get a little bit better, every day we improve, and every day we find our path a little bit better, and the training and in life. I think that's the purpose.
What's really interesting, if we, from the investing thing, I was over in Sao Paulo and Argentina a couple of weeks ago, and we went to an event. There's a company we've invested called Velvet.io. That's VELVET.io. Small plug. Anyway, they're investing and they're working with a lot of the Latin American unicorns and startups. And what they do is they sell secondary shares, the founder shares, to the open market, which are normally very hard to come across and get to. Anyway, what they were showing Rappi, which is a super app of Latin America, and they showed this diagram. He's here, and now he was employee 3, 4, and 5 at the company. They've sold, they've IPO'd. Now they've gone and started their company, and they've started their company, and so forth. And then they've gone and started their company. Go back to PayPal or X.com, same thing, start here. So everybody involved in that ecosystem, there is no, you don't just go and sell a company an IPO and finish and go and sit on the beach and read a book. All these people love building things, and then they want to go on to the next one. Now, where Velvet's interesting and why we're interested, we now want to go and help those, let's call it second generation founders with that startup company, because we know they've done that journey first. They know what it takes and what to do. They've got a good network. How do we get into that? Help them grow. And then you've got the next third generation of that startup. How do we get into that, and how do we help them grow and build our network as well? So I don't think there ever is an end. I think people in that mindset will continue doing it, and they just enjoy the pleasure of the game, of the journey. And you can just see it revolving around and coming down different levels. And be it Skype, the Skype one in Estonia, and how that then went to TransferWise and Pipedrive and whatnot, or PayPal, like I said, or now Nubank is the big one over in Brazil, and the startups coming from under that. It's fascinating to watch and sort of see that grow over time as well.
Yeah. No, it's a fair point, and this as a final point here as well. I think another aspect, I have a friend who was always like a high achiever and very driven, and founded companies, built himself from scratch and whatnot. And the day he made an exit, and he felt that he had arrived, it led for him to fall into a really deep depression.
Empty. Yep.
Yeah, he fell into because all of a sudden purpose disappeared, and he didn't have a reason to wake up, so to say, or like do anything in the day. And I think that's maybe connected as well to some people. They just are very driven by this big purpose, kind of like, and if they lose that purpose, all the the structure in their life just disappears. And I think this is a source for depression in general. It's the first thing a psychologist would ask, like, first of all, are you eating right? Are you sleeping right? That's the source for depression. But then second question is like, what's your framework? Like do you have a job? So on and so forth, and like
What's the
building that
structure going on? Yeah.
building that structure is like a big part as well to kind of keep yourself motivated, I think.
I was always told if you sell a big business, a big part of your life, and let's call it a big casino, you do it, you sign the papers, the money's in the bank, fantastic. Then you roll up in a ball on the floor and you bawl your eyes out. And you start thinking about it going, but I think this is very much because it's sort of that big part of your life is now gone to someone else.
Yeah.
What are you doing now? And someone said to me, just be very careful. You might have this feeling, and you need to mentally prepare yourself for that void that's been such a big part of your thought process, your physical process, and everything else. So, I can definitely see that. But that's when they should start investing as well, and then get back in the game. Very easy.
You get into it, it's good point, and that's what happened to him as well, my friend. He eventually, he got into a new product, and then all of a sudden, from one day to the other, the motivation was back again, and the depression was gone more or less. It's quite interesting to think about. Tim, I've gotten to like, I'm looking at my outline here, and I've gotten to like the second point out of 10. We are 40 minutes into the podcast, but I'm just going to take a step back here and ask you again, going back to the macro climate that we're going through at the moment. I'm really curious to know from your perspective, how do you think the industries that you are active in at the moment will be affected by the current macroclimate? So we have, from your end, Yolo investment is focusing on crypto, on fintech, and iGaming. If I'm not mistaken, it's those three. And how would you break down these industries as we now go through this uncertain climate? Is there any differences or similarities?
So let's start with gaming. It's the easy one. It'll increase. We saw during COVID, it will bust all recessionary pressures when there is a recession coming in, or what did you call it?
Stagflation?
Stagflation, yes, exactly. People will go back to sin activities more. Drinking, smoking, drugs, gambling. It's the way it's been, and everything's very cyclical in that sense. So I think gambling, there'll be no problem. I think there might be less exits and less investments done in an uncertain climate for sure. And people need to then sort of just keep their head down and work hard and deliver. But it's a good time to run a business and really. The funny thing is, when COVID first came in, and isn't it great how COVID's just disappeared off the newspaper? But anyway, everyone, we need to cut costs, so let's cut our marketing budget. It's the easiest thing to turn off from the P&L. The most wrong and horrendous decision which can be made. This is when you should be doubling down on your marketing budget. When everyone else is, cutting theirs, that's when you should double down. But I think gambling will be fine. I just think the investment appetite, I think all those SPACs in America will SPAC themselves, and I wouldn't want to be listed on the stock market as a small cap right now. I think it was at Esports Interactive or something. There was a terrible graph I saw today, and there's
minus 98%.
Minus 98%, exactly right. And there's confusion in the market, so there's not really going to be very bullish going forward. So any gaming ones, I'll be telling them, keep yourself private, keep your head down, build up your cash reserves right now, and wait for the rainy day and then deploy at the right time. Fintech, people always need to keep moving money. Bottom line, what's very interesting is the DeFi protocols out there and the sort of the centralization of lending and borrowing, which is completely revolutionizing how the banking industry has made its money over the last, since the Medicis, basically. And I think people who have got cash will lend it at good rates, and people who need cash will borrow it and, collateralize crypto loans. It's a fascinating area because you need to put more crypto in. You can do it. You can, not having a 25-year loan term anymore, you can have a 24-hour contract. In fact, we're building one called borrow.io, and I think it's a 1-second contract which continually ticks over automatically. So you can actually exit without penalty at any time. the way it should be. Because all these hidden fees are hidden fees because you had some greedy corporate cats in there. Actually, if you make this a decentralized, transparent protocol, it can really make things a lot better. So I think there's opportunities for banking frameworks to start bringing in some of those crypto protocols on the borrowing and lending, and clearing the 2%. Borrow at 5%, but you can lend at 7, lend at 4, and borrow at 5. There's a good margin there for everybody. Everyone's making hay, and it's good because still negative interest rates in Europe in that sense. In terms of crypto, people called the crypto winter coming, and I think the Luna Terra UDT fiasco was bound to happen. And you know why? Because people were offered 20% interest rate through their Parachute or not Avalanche. It was some crap. I don't know what it was, but Anchor, I think it was. Who in this world gives 20% interest rate through hot air? Come on, people, use your brains a little bit. So that's been a huge. I read a lot about how it happened, and there's some talk about.
Can you just, Tim, just for the audience who perhaps haven't heard about this, like massive crash of Luna, basically $40 billion market cap going down to 0.8 billion. Can you explain what happened?
Okay. So you've got stable coins which are taking over. So let's go make it even easier. Bitcoin and Ethereum have become very well regarded as a store of wealth. And now USDT, or a stable coin, has become the transactional crypto, which obviously runs on programmatic rails. If I'm going to represent $1, I need to back it up with $1 something, like a central bank would always do. Now, you've got USDC, which is by Coinbase, and they hold financial reserves at $100 in a bank, and they will then create $100 worth of coin through smart contracts, to make it simple. You've got Tether, which is USDT, who say they're 100% backed. Now, they're saying they've got cash, they've got bonds, they've got script. Bottom line is there's some very big exchanges who are behind Tether who will not let it fail, because the whole issue between moving money between exchanges to do trading, that's how you could move a significant amount of value between Bitfinex and FTX and Binance. And you couldn't always, with Bitcoin and Ethereum, you didn't. If you wanted to go and use a pair somewhere else, you use that stable coin, which is basically $1.99.8 or whatever else. It is backed by something, and it's pretty much a couple of very big exchanges and a lot of Ethereum behind it as well. But it's not a transparent one. So, funnily enough, it's through this saga I'm about to talk about, they have a little dip, but they've got back to where they need to get to.
Yeah. Then
you had UDT and Terra, and it was programmatic. And what they were saying was that we're going to mint $1, and instead of having the currency reserve, we're going to have a coin called Luna or Terra, one of the two, I can't remember. And if it goes down, our people will go and buy more. If it goes up, we will burn coins, which will have less supply, more supply, less demand, one of the two, but it should bring it back to a natural peg. And that was a programmatic process, so you didn't actually need to back it, but they were trying to back it with Bitcoin reserves and programmatic arbitrage, for lack of a better word. And that was all good until some really, really smart people on Wall Street, and probably high frequency trader versus high frequency trader, said, if we can find a hole, we're going to go for it. And then they systematically went after it, and they sold off one of the assets, which dropped the peg down, and the automatic protocol of buying the profit back up, and it happened. And some of the firms dumped in, 600 million, 1.5 billion, trying to preserve that peg, but the force was too great, and they found a hole in the programmatic algorithm, until finally the mob came in and sold off because they lost confidence, and then down the toilet. Yeah. So
it's a.
Sorry, go on.
No, go ahead. Go ahead.
So it just tells me that I love what Meta or Facebook were trying to do with their token, DM, I think it was called, where they would have set up in Switzerland a foundation and have 27 world currencies and bullion, and actually try and manage a treasury through a foundation, whether it be Visa, whether it be Spotify, Facebook. Coin Gaming actually tried to get involved in it too, by the way. I thought but they were managing a treasury which would be the 100% collateral on a basket of fiat currencies and metals to then have the backing for Facebook to launch this DM token, which in essence is a stable coin, which would allow programmatic buying and selling transactions of paying and receiving money as a merchant within the Facebook infrastructure, which to me was mind-blowing because you've got Facebook marketplaces, you shouldn't be using credit cards, some 1960 technology. You should be using some programmatic digital fractional currency which has some backing somewhere which to hold its value and then let that money move around and flow in essence. So it's a real pity the SEC and the American government decided to put a stop to what Zuckerberg was doing, and I really and truly hope that it will come to fruition again. Same with Telegram. They released their TON coin, and that was meant to be a payment instrument with inside Telegram, which makes huge amounts of sense. But of course, the American government want to protect the US dollar bill, and they jumped in there and. Hi, Uncle Sam. But within their own prerogative, they took processes to protect that US dollar bill. So, getting back to Tether, the UDT, it then crashed, and there's a lot of people who invested money in there, and there was lockups and whatnot. And in the end, it went down to zero, and 40 billion was wiped out. Now, the great thing about the crypto community ecosystem, we've been through Mt. Gox. We've been through this, we've been through that, we've been through UDT going down, and yet it still happens to survive. And that's the wonderful thing, because remember Reserve Bank of Scotland, RBS, it was too big to fail, the English government said, and they had to be bailed out. Actually, let them fail. Let them fail.
Yeah.
Bottom line.
That's what crypto has kind of endured, all these massive drawbacks. Like you mentioned Mt. Gox, for example, when that hack happened, it crashed Bitcoin temporarily, but it after a while it recovers, right? It
was about 10% of the Bitcoin, I think, was also Mt. Gox at that time.
Yeah, it was a massive amount.
I don't think any economist 20 years ago would be proposing that you could lose 10% of a monetary supply and it would recover. And I think this is the great thing about crypto, and that's probably why I like it. It's challenging the status quo. Of how monetary supply should work, and I'm not an economist by any shape, form, or manner, but having a government or a secret band of people dictate monetary policy and raise interest rates and do this and do that because they arbitrarily think this is good for the economy, I think the world's changed. It's become more decentralized and more instantaneous, and I think crypto allows that to play out, which means there will be ups and there will be downs, and you need to be prepared to ride them. And as I said, don't put all the eggs in one basket, pretty simply, but try your best and enjoy the journey likewise as well.
Are you telling me I shouldn't put all my money into a digital ape?
Well, apparently the floor price of the Bored Ape Yacht Club apes are now going down. It's down to 100,000. It used to be at 300 Tether before, 300 Ethereum beforehand. But if you want me to get started on NFTs, they lack utility,
Please do.
They lack value, and it's all built on hype. As soon as someone comes out with an NFT, technology by itself is ingenious, but it's got to be revenue. There's got to be utility behind it. It's got to do something, and people must want to buy it to use it to derive some value or to unlock some door, and that's desirable. And once you start creating 10,000 of those keys, if I can call it, and you create desire and people want to come and use that service or get a dividend because you hold that token, now the value grows of that token because there is a financial return coming for it. So it makes it sensible. It's like buying a house. The house, hopefully, on the good part of the street where you live, that house will increase in value. So there's demand for your house, which will reflect what the future value is because you have yield when you rent that out to on the rental market. So you've gone through this whole phase of what NFTs look cool. Or you can you buy your Bored Ape Yacht Club and put it on your WhatsApp profile picture, and what's it there? Self-gratification. Sure, that's worth a bit of money in today's Instagram world, but at the end of the day, what are the basic principles of why people want to buy something? Because it brings returns value. On the other side of the coin is then when you start saying you can get 20% on an ANCAP protocol on interest rate putting money in, and then people start borrowing money to put it in to go and get a 20% APR, bloody ridiculous. People need to sit down and think a little bit. Now, of course, we put some money into Luna. I'm going to gamble on everything here. I'm not silly. I'm not going to be say I'm not going to do anything, because I wouldn't be sitting here if I did that. But we put a measured amount in there that we were happy with the exposure that we were willing to lose if shit hit the fan, and it did. So onwards and upwards.
That's it, Tim. And I mean, taking into the account the macroclimate, you mentioned stagflation before, and essentially the concept of stagflation is like a double recession, you could call, and some economists think that we are moving into that type of climate where essentially inflation. Let's say there's a drawback in the economy, so the economy shrinks, and unemployment goes up, and the economy gets smaller. And usually, when that happens, inflation goes down, right? Because there's less purchasing power. But in a stagflation, the inflation keeps rising in this climate. So this is why it's called like a double recession. And doesn't it feel, Tim, like in the last 12 years, the rise of cryptocurrencies have been kind of rising through a period of growth. Don't you feel that this could be different? And is it an existential threat to cryptos?
Bring in Frank Underwood and American Works campaign. That's what I say.
That's it.
I agree with you that if we're I've always maintained that crypto is not an investment asset. It should never be considered an investment asset. It is a programmatic packet of value between two untrusted parties. So if I need to send you $100, Pierre, I can send it to you, and you can, and you didn't know me, I can send something to you, and you know that no one can ever revert that transaction, no one can ever devalue that transaction at that time. Well, it can be devalued in future time of market demand and supply. But I can send you something between two untrusted parties that cannot be, it's immutable. And that actually is what crypto framework does. And people need to start thinking, how do you bring that into utility? How do you put house property records onto a blockchain which become immutable? And how can I then put a house sale behind a smart contract so I can send in Ethereum and then trigger that transaction? I remember talking about it years ago, trying to prophesize where I saw what crypto could do. You could put a crypto wallet in a gas tank in a car, and a crypto wallet in a gas pump at a service station. And the car could, when you've gone to bed, the car could autonomously drive itself down to the BP, and it could then talk to the pump, and somehow that we still got to pick it up. But let's imagine it could magically get into the thing. It could fill up, and then the gas tank could send some money from its wallet to the pump wallet, be transacted, come home, and then when you wake up in the morning, you're at a full tank. Now, that's what programmatic money is allowing us to do. And it's not give $20, I've got no change, that 47 cents or whatever it is. We can now send money up to 8 decimal places, to be exact, on the way money shouldn't be at 2 decimal places. It is because you've got these cents, which are small coins, which are almost, it costs more money to make those cents than it is the value that they actually are. If we can now have an efficient economy which can run with programmatic money, which works between two untrusted parties, whether you're sitting next to me, you're sitting in Malta, or you're sitting in Australia, it shouldn't matter where you are. There should be no geographical borders. And that is what crypto allows us to do. It's funny how Bitcoin, through all this, the most simple protocol which was built, yes, there's been all this other stuff coming on top and trying to make better chains and better characteristics and smart contracts and layer 2, layer 3. But actually, Bitcoin still, through its simplicity, has survived all and continues to grow and be adopted as that store of wealth, which is exactly what it's intended to be. Yes,
exactly. That's it. And I find it interesting as well. You have these Bitcoin maxis, the maximalists. They believe that the foundation of all crypto should be Bitcoin. Like Bitcoin is layer 1 and Ethereum is layer 2 type of thing. As to kind of stabilize the entire crypto space. Is that a sentiment you agree to?
And on that point, so if you have the store of wealth with Bitcoin, and then you allow it to use Ethereum, and you start bringing in a MetaMask wallet, which can then have a MetaMask or wallet connect into a casino, for instance, and you can open up a payment channel so you don't actually have to move the money. Every bet will take the required amount of money from that MetaMask wallet. You don't need to use email password to log in anymore. It's all controlled. There's a site called skiff.com, and you now log into an email client using MetaMask. So there's no name on the email. It's coming from your ENS domain. Yes, I have yolo.eth. But
very good. I have next.eth, by the way.
Good.
Next one.eth.
Yeah, very good. But I mean, that becomes the identifier, which is controlled by the wallet, which you control the private keys to. And you need to now be responsible for your emails or your money with those private keys. It's not email password, and it shouldn't be. That's Web 1. Web 2, yes, having an OAuth login via Google or Facebook or Twitter or Telegram was a good, convenient Band-Aid, and it worked. But still, sometimes it doesn't work for some reason because the OAuth.com doesn't work. Give me now layer 3, which is MetaMask, or Wallet Connect, Trust Wallet, Coinbase Wallet, whatever, and let me log in and authenticate my wallet to that site, not me to that site, because that's what the connection needs to be between my money and that site to transact.
Yeah.
Now, that scares people because how do you know that I'm the one controlling that wallet? Well, you don't, but I should be protecting my private keys to do that. But that's the world we live in, where you want to connect money with a person to blame them if they're wrong, which is fundamentally the whole problem, you know?
Fair enough. Are you a believer, Tim? I mean, this you mentioned Web 1, Web 2, Web 3, and the proposition of Web 3 is that we're moving towards a decentralized internet, power back to the users and so on. Are you a believer in this kind of decentralized future where many projects and services will become truly decentralized again through DAOs and things like this, or do you still believe that like central entities like the major Facebooks and the Web2 products will still reign supreme, or is there even a competition? Like,
so I'm on Web 4 already, just to let you know.
Oh, there you go. Thinking 4D. I like it.
I fundamentally believe. That we're back at a Kodak moment, late 80s, and I did an AMA to the group last Friday and talked about what my vision was for the next 3 to 5 years of where we need to get to as the Yolo group with our casino properties and our sports betting properties. And I sort of said we want to do Web3 and the benefits and the amazing connectivity of what it allows us to do programmatically, but we're too scared to let go of username and password. We want to now look at what currencies we can use and how we can do stuff in Africa and Latin America and atomic swaps. But just in case, we better have a few methods because you never know. And I said, I think it's about time that we actually just rethink the whole thing and work out where we need to get to. So for the last 6 years, I've been working on a project called Casino.io. And the idea is, how do we decentralize the whole casino industry? And basically means it's turning upside down. For years, it's been centralized. Now, whether that be a company in Curacao or Gibraltar or Malta, there's been one secretly veiled owner or ownership bankroll of a casino done through a single entity, and no one's ever really showed how that casino works. My idea is, how do we turn the whole thing upside down? How do we have a token? How do we have the gameplay? And you don't play the game in a fluctuating token, but how do you use a stable coin? So USDT can be the gaming unit, fine. There will only be Web3 logins. So it's all MetaMask driven, Wallet Connect driven. And, you can buy and sell your fiat and do your KYC there, and you can tokenize that KYC through if gaming regulations require it. But then there needs to be a token that you can buy, and if you stake that token, and very much based on looks rare, you can stake that token, and then you get a percentage of the profits from the casino from that day. And my idea is 75% of the casino should be owned by the tokens. We'll provide the plumbing. And I always talk about building the aqueducts in the Roman Empire as the key. We'll let the water flow and we'll charge a service fee for that. So we'll take 25%. But 75%, if you stake your token, then you'll earn a percentage of the daily profits. Now, if you play on the casino, you will also earn tokens on through the distribution channel. So the more you play, the more you turn over, the more tokens you earn. Then you can stake them and earn daily dividends. Or now all of a sudden that, let's call it NFT, has value. So now people can buy and sell those tokens on a secondary market. Even better, I buy tokens, I stake them, I go and play. But my tokens, I can handle my risk adjustment. Oh, Tim Heath's playing Baccarat at 100,000 a hand. I want to put more emphasis of my tokens on his action, and I can distribute my balance as the casino banker. I want to distribute my balance there as well. Now, it gets even better. Let's say Pragmatic come to me and say, we'd like to be involved. We want our game on the top of the lobby. Great. You go and buy $100,000 worth of tokens, and then we'll give you 2x for people who play that. Anyone playing that game will get 2x of the token distribution they should, but the supplier is paying for that. So now they're getting an incentive because they're making their 10%, pick a number, they're making their revenue from that, but they've got to invest into this casino platform. Now I earn tokens, I stake them, I can earn more money, or I can sell them. All of a sudden, the whole casino is owned by 50,000 people. And you know what? All I say to them, can you please go and invite 5 friends to play in your casino? And I think this is the way of what a decentralized casino needs to look like. And what we've been building this whole ecosystem for the last 6-8 years is how do we have all the different parts of this ecosystem to put it together to now say, right, now we've got it. Now let's turn it upside down and let the world own it. And look, I will own tokens in there as well. I'll be staking them, and Yolo Group will be staking them, Yolo Investments. But you know what? Pierre's going to also own tokens. Or Pierre's going to do a podcast, and he's going to put that on the front page of this casino.io. And you know what? I like the podcast, Pierre. I'm going to give you a fraction of a token and pay for the enjoyment you've given me. Or you might say, to watch my podcast, you need to pay me 1 token. And all of a sudden, you can now get that and stake that and then earn a fraction of the revenues from that casino. But I truly believe this is where it needs to get to. People talk about the metaverse and always think it's about putting AR goggles on and going out and doing that. It's not. It's an open development framework is what the metaverse really is. I don't see the reason about people going up and buying fake virtual land plots. If you're marketing and we've got this casino.io and Nike want to do some type of promotion, we will let Nike buy some advertising on there and speak to the right customers they need to speak to. That is what buying a plot is on something. Zrun, I want to advertise sportsbet.io on the edge of the racetrack, But metaverse is about letting anyone build anything on this framework, which has got that centralized currency going around, if the economics of it all is correct. Even to the extent then if we had a company which gave you a framework to build slots, and you might have an idea for an elephant slot or a Book of Pierre slot or whatever, I want to give you the tools to go and build that slot, get it certified, and put that game onto this meta casino, and then you can earn money from anyone playing on that. But I want you to be able to promote that game in there as well. So then you have hosts there's 50 hosts, so it's pierre.casino.io, and we'll structure it so you can earn money by bringing people in there, but you might be streaming, and that might convince people to come play on your one there as well. But the great thing is there's a bankroll there, which also grows. So now you can have the biggest bankroll, which is transparent. Anyone can make any bet in the world. And for the jurisdictional compliance people out there, yes, there may well be uk.casino.io, which has got its gaming license if the UK GC agreed to it. I don't know if they did. But I think
good luck with that.
Good luck with that, but maybe it's possible. But I think then everything is then driven by this Web3 login, that everything is controlled there. It is an open payment channel for all participants and all stakeholders in this casino-verse. And that's how the money moves fluently at fractions of pennies, if what dictates. Now, it might, we all know Axie Infinity and what they've done in the Philippines, 2.5 million monthly active users, and you've got scholars who are making $20, $30 a day. Now, that's double, triple the monthly average salary in Philippines. So this is a economic benefit to people who don't have the same economic advantages as you or I. So
Yeah.
this whole Web3 is bringing power to the people to participate in how they want to participate. But hopefully the economic model is right, that everyone can then, it's the Uber of a casino, as it should be. And yes, Uber will charge its 20% for providing the aqueduct. Yolo Group will provide the aqueduct there with all the technology. But we allow it to grow in whichever direction people want to take it, and we give power to the people and power to the player. And, you know, I've talked about, why are people buying apes? Because of their ego. Why does everyone rail the full tilt 3,000, 6,000 game with Falavi and Dwan? Because they want to live the dream. Well, then we can bring that same ego into Casino.io. So if you're betting 200,000 a hand, you might have 2,000 people watching, and you might be streaming, and people can come and play against you as the house, which mathematically is the correct thing to do in the long term. So we're building this. We're dreaming of this. It's a pretty big project, realistically. But to answer your question, where does Web 2 and Web 3 sit? No, there won't be an email login, an email password login to Casino.io, and neither there should be, in essence.
That's a pretty remarkable vision, let's say, of building something that is totally different from what we have seen before using the current technology. It's like you outlining the vision for an online betting site in 1997, let's say, when as a land-based operator.
A Stoke-on-Trent car park, basically, yeah.
Yeah, exactly. It's super interesting to hear. And when would you expect a product like this to
we launch? Think we have one first iteration coming out, working with one crypto wallet and putting this infrastructure inside their wallet in a very much sandbox environment. I would love to see this turned on by the end of the year.
Wow.
But it's been really interesting. You know, obviously a lot of people are building tech stacks in the gaming industry, and you kind of build and you build and you build and you build, and it becomes immutable that you've got a problem down in the core. You can't really go and change it. So I said to my development team, line in the sand, everything we've learnt, every mistake we've made over the last 20 years in the gaming world, or the last 8 years in the crypto world, build it again. And I started 18 months ago, and I said, you've got a clean slate, build it again. Because you don't get many opportunities to do this in a corporate world. We're fortunate that we could allocate resources and do that and invest into this quite heavily on how we want to do it. And there's a team been working on it for 18 months, and it's spectacular with what it's being built. It's using frameworks on Alexia and Erlang, which is what powered WhatsApp, for instance. You know, a billion users around the world with 8 programmers which used to run WhatsApp. So technologically wise, it's latest and greatest, and it's I'd even like to see it being run as an open SDK, in essence, that I want anybody to build onto this platform how they see fit and what they think needs to be there, and how they can then derive value from what they're building and merging in the GitHub repositories. How do we give the power of the economy and the infrastructure and the entertainment factor and the content providers to the people to build whatever the hell they want to build? And if it's good, they'll get paid for it. And if it's bad, no one will play on it. But it's like its own little ecosystem. So that's my definition of a metaverse. And yeah, it's pretty exciting to build Bet366.
I like it. That scrap the casino.io, please. Bet366. That's it. I love it too. I think this is a great way to start rounding off the podcast today, Tim. It's been an absolute pleasure, like always. It's a journey going through these things with you, and as I mentioned here, I'm looking at the outline here. We ended up going through practically 3 points out of 10 that I prepared, but then that's good, because then we have another podcast down the line and I don't have to write a new outline. So thank you so much, Tim, for today, for sharing all the insights, and interesting to hear your perspective, and all the best of luck building
Absolutely.
Bet366.
Thanks, Pierre. Always love having a yarn with you. And I hope I'm not sure if I was meant to talk about it, but it felt like the right time to say this is. You talked about your vision. This is what's in my vision as well, and I get excited by it. So I think it's about sharing it, and I look forward to getting your feedback on where you think we can refine this idea as well, because that's it's a very important part of it all.
Absolutely. The journey is the reward, my friend.
Absolutely.
And we see you down the line.
Good. Thanks,
Thank you so
Pierre.
much.
Cheers, mate.